This is the fourth quarter update for the Amplify Seymor Cannabis ETF, symbol CNBS. Joining me is portfolio manager Tim Seymour. Tim, let's start off at a high level and remind viewers the investment thesis behind CNBS.
Thanks, Jay. So CNBS is an active ETF strategy intended to give investors thematic exposure, diversified exposure to the cannabis sector. By definition, 80% of the portfolio needs to have companies that have more than 50% of their revenues focused in cannabis. It's particularly important because over the last 2 or 3 years of investing in cannabis, investors have tried to find proxy plays to get exposure. And there are funds out there that aren't really cannabis funds that have a lot of exposure to pharma companies and tobacco companies and agricultural companies that are not really cannabis companies. And I think investors should be focused on that. But being active in this sector means being able to adjust to very quick and evolving legislative changes. There's a lot of M&A and call it merger activity in a sector that's quickly evolving. And finally, between corporate governance and just the way the industry is evolving, the subsectors to investing in cannabis today are different than they will be tomorrow. And it's our hope to be positioned for that.
Tim, as you look back on the fourth quarter, were there any trends in the cannabis industry that you think are still important to pay attention to as we head into the new year?
I think the focus on the macro in cannabis is where a lot of the difficult price action came in 2021, because the fundamentals of the companies in terms of earnings multiples and addressable markets, so the size, the potential of cannabis, is very much the exciting story that it was 2, 3, 4 years ago. In fact, it's more exciting when you actually consider the size of the market, and even without the DC folks, we'll call them, falling in line on federal legalization. State by state, the parade of programs for either medical programs or, in the case where there was a medical program, an adult program to make cannabis more accessible, continue. So the fourth quarter trends were really about where the valuations of these companies were getting cheaper, and they were getting cheaper both on a EBITDA multiple and on a price to sales multiple. There's different ways to look at cannabis, but we came into 2021 at about 13 times EBITDA. We left 2021 at around 10.5 times EBITDA. And as we get into the first quarter here, and really we look to multiples based upon 23 earnings, there's a very strong analytical argument that cannabis is trading somewhere around 7 to 8 times EBITDA. So again, valuations dropped into the context of a very high growth industry is what makes this exciting.
So then through that lens, when you look at the subsectors of the ETF, CNBS, what changes have you seen unfold here recently, and how do you see it playing out through the rest of the quarter?
Well, look, the U.S. market is the most compelling market in terms of size, in terms of opportunity, and I think even in terms of sophistication. The portfolio at CNBS certainly continues to evolve to be where we believe the best positioning should be. So where we are different today than we were going into the fourth quarter is simply we are heavier weighted in the U.S. We've always felt the U.S. was the market to be in, but there have been more global stories. There have been stories that I think have given us more exposure to the picks and the shovels, some of the specialty retailers that even are U.S. companies, but ones that are more exposed to ways to have that backbone infrastructure exposure to the sector. But truly vertically integrated companies that are operating in states that are limited license states where they have a competitive moat around their business. At this point, look, the top three, let's go right to my notes here. The top 3 positions in CNBS are US MSOs, and 5 of the top 7 positions in CNBS are US MSOs. So the biggest, most, we think, opportune vertically integrated companies are the places that we put the most exposure. And at a time when I think, look, these valuations are more compelling than at other times, I think this is the right positioning.
And what is an MSO?
That stands for a multi-state operator, and that is call that the acronym that's jargon as opposed to an SSO, which is a single state operator. What's interesting is that in 2021 there was some M&A activity. There were some of the bigger players that were merging. I think you will see more of that. But really, what you're seeing is that the multi-state operators are, there's 5 to 10 multi-state operators of some scale that I think are going to continue to be absorbing single state operators, states where they don't have positioning, but states that are, and therefore not redundant to the geographic footprint they already have.
So, Tim, when you look at your top 10 holdings, are there any names that really stand out to you right now as being in a particularly competitive position?
Well, again, I would just say, and I'll remind that the top 10 holdings are about 60% of the portfolio. So in terms of portfolio construction, we're not afraid to be recently concentrated towards the top of the balance sheet. And the largest position, Green Thumb Industries, is the one we naturally feel the highest conviction for. This is one of these multi-state operators that we think is positioned in some of the most profitable states right now. Those would include Illinois. They would include Pennsylvania, positioning in New Jersey. And so GTI, we think, is at this point proven to be probably the most profitable multi-state operator. And we positioned it as such at about a 9.5% position in the balance sheet. We've had exposure in the past to some of these specialty retailers. We've downsized those positions. I think that environment has become a lot more competitive. And one of the things that you've come to realize about the cannabis sector, as exciting as the growth opportunity is, there's almost so much infrastructure that a lot of these companies need to build out. A lot of that's not to say that they won't continue to need to buy nutrients and agricultural fertilizers and products to support the growth cycle. But some of the infrastructure as it relates to lights and racks and some of the equipment to measure the cultivation cycle, I think you're seeing in some of these names, we found some of that growth to be really front weighted. So we started to fade some of that exposure. We still continue to like ways we can get exposure to software, e-commerce, marketplaces. And I think that's one of the places that makes this portfolio well positioned to really surround the sector. And again, the sector isn't just about finding these vertically integrated cultivators and producers. There's such an ecosystem around cannabis, and part of investing thematically in cannabis in an ETF is having that entire exposure.
All right, so let's wrap up with your thoughts around this theme as you look out over the next 12 to 24 months. How do you see it playing out? Where do you think there are opportunities? And if you wouldn't mind, your current thoughts on the potential for federal legalization.
Sure. So it's with some irony that 1 year ago at this time we were just getting through this Georgia Senate runoff, which at least changed the characterization of the Senate to at least blue, at least as it pertained to the prospect of cannabis legislation and the excitement that the market took to expectation that you're going to see some federal legalization in 2021. 1 year later, I would argue that we've really priced that entirely out of the market. And in fact, some of the macro has actually been, it's not only it's been a headwind, it's been an obvious headwind, but I think the fact that investors are not investing on, we're certainly not investing on an expectation of federal this or that in 2022. I think you've reset the expectations here. Meanwhile, as pointed out, the valuations are more compelling in a market that is larger than it was. So the things that investors should be concerned and watch are also, though, related to, look, the price of the product, the price of wholesale cannabis in the United States continues to come down. And critics of the sector will point out that this is, it's an ag story no different than any other ag story, and it's a commodity. The folks that really get excited about the industry, though, will also say that this is ultimately, though, evolving into a very sophisticated consumer packaged goods sector, and that whatever the cost of for wheat, barley, and hops to make beer, the reason Anheuser-Busch is the largest beer producer in the world is because of the branding and the marketing and the distribution and the company that's really built a moat around their business related to those factors. That's where I think cannabis is going to continue to move in 2022. And some of these multi-state operators that we have exposure to, I think, are the next wave of those big consumer packaged goods companies, but in cannabis. So those themes where investors have to look past just, hey, it's an exciting time for someone to be putting down a physical asset base and building out a cultivation footprint. It's about which companies are developing brands, which companies really, I think, have started to insulate the margins around their business because, in fact, they are the companies that are going to be the Budweisers of tomorrow.
To learn more about the Amplify Seymor Cannabis ETF, please visit cnbsetf.com. That's cnbsetf.com. Tim, thanks so much for coming on.
Thanks, Jay. Great to be here.